Good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates. I'm your host, Swaraj, and I have with me JK, and we will be covering the latest developments in the financial markets. As the world is battling inflation, some positive news on the food prices was that wheat prices eased for third session after Russian president said he's willing to open sea corridors for international shipping from 7 ports of Ukraine. We also had strong recovery in stocks, especially Nasdaq giving a good bounce. JK, good morning. Please take us through the latest developments for the day.
Yeah, good morning, all. I think day after the Fed meetings were released, markets took heart from the fact that there is a good possibility of Fed pausing after a couple of rate hikes in June and July by 0.5%. And economic data actually evidencing that there is some slowdown seen in US. US GDP second estimate for Q1 came again minus 1.5%, following minus 1.4% in the first estimate. And this was worse than minus 1.3 that was expected. Once again, the negative trade balance played a major part. Consumption held up, but inventories were lower. So all this contributed in a good measure to the economy slowing down in a GDP number. Of course, there is an expectation that the second quarter, the April-June, will be much better for the US economy. Market is right now not considering this as a very negative factor. One, because there are extraordinary factors at play. And second, also that markets have been quite oversold recently, and particularly Nasdaq is nearly 30% down, and there are some bargains in the market. PE ratios have fallen quite a bit, and they have come to the long-term averages. So with money is still not so scarce, I think bargain hunters are seen and pushed up all the three indices in US higher. Of course, there was another evidence of economy slowing down, the pending home sales, which was once again worse than the forecast. Market support also emerged from the fact that UK is also getting into some fiscal measures to help consumers fight the increasing cost of living. So again, consumption is getting some sort of a support. Yeah, we have the PCE number tonight, which will be a very important indicator for inflation, which Fed follows. And as Swaraj mentioned, the easing of shipments of food items from the Russian ports is good news for us. On the dollar, clearly the euro has held the breakout level of 1.0650, and we have seen a rally of nearly 1% from there, giving a sense that dollar perhaps is topped out for the near term, particularly as the market seems to have more than discounted the expected rate hikes from the US. Of course, the evolving inflationary situation needs to be watched. The surprising rally was in the UK pound, which was sold off severely this week after a very weak PMI services number. But bargain hunters have once again come in, because one should remember that UK rates are probably going to be equal to that of US by the end of this year. And definitely UK pound is structurally oversold after the Brexit has hardly recovered more than 9 to 10%. So you can expect UK pound to reach 1.2750 in this recovery rally. We have had other bigger moves in the currencies. Chinese yuan rallied, rather USD Chinese yuan rallied almost 1% today after a very high fixing by Chinese authorities over 6.73, and this was compared to 6.67 yesterday. The sense is that Chinese authorities are taking various measures to address the slowdown in the economy, and possibly the weakening currency would be of additional help in recovery that they are trying to achieve. Russian ruble, again a big mover yesterday, weakening by 7%. Of course, this is after a huge strength in the in the Russian ruble from around 150 to 50s seen this month. There was a rate cut by the Russian central bank citing easing of conditions, and this is a third rate cut from the high of 20% to 11%. Russian ruble weakened 7%. Technically, it looks extremely overbought against the dollar. Therefore, see more rally in USD RUB in the coming sessions. Coming to our own rupee, nothing much to add as far as the ranges are concerned. They are held in a very tight 50-70 band. Today, we might open slightly weaker on the basis of fresh rally in the oil and also the Chinese yuan weakness. But once again, I don't see RBI letting the rupee off the hook. And so we will see the same ranges prevail. Just to mention that the OPEC meeting will be there next week on June 2nd. While there are requests from oil importing countries to have a faster pace of output increase, OPEC is unlikely to relent, and they are going to stick to the earlier agreed pace of output increases. So don't see much impact of downward movement in the crude prices. So that's going to be continued challenge for the INR. So that's it. Have a nice weekend. See you all on Monday.
Okay, thank you, JK. And as JK mentioned, there is a good possibility of Fed pausing after a couple of rate hikes from June and July, as there seems to be some slowdown in the US growth numbers. While PC numbers is something Fed and markets will be watching. So keep managing your risk. That's it from our end. Have a very good weekend, everyone. Bye-bye.